Hey everybody, Bob Knakal, Chairman and CEO of BKREA, coming to you from the Knakal Map Room. Welcome to the Bob Knakal Show. Today's guest is none other than Andy Davidoff, who is the chairman of Emmes Companies. Andy is an old friend. We've known each other for over 30 years. I think we've done 25 or 26 deals together over the years, and he is a prolific investor, buying all types of properties in New York, on the West Coast, in Japan. Andy has a fascinating story from how he grew up and got into the business to where he is today. And I love his story, love working with him. He's been a great client, turned into a great friend, and can't wait to get to it. So he's on his way in. Let's get to the show. And of course, we have to say thank you to our major sponsor, CREALEState. So I have to tell you, we use CREALEState every day. Our whole team here at BKREA does one thing and one thing only. We represent sellers, and we represent them exclusively, and all we try to do is maximize the sale prices that they get. How do we do it? We use that great tool, CREALEState. Almost everybody in the office is on that almost all day long as we figure out where to find that next buyer that could possibly pay the highest price for one of our clients' properties. CREALEState, it's the most powerful platform on which you can prospect, evaluate, connect, and close any commercial real estate transaction. Thank you so much to our good friends at CREALEState for sponsoring the show. Welcome. Let's get to it. Hey everybody, Bob Knakal coming to you from the Knakal Map Room. Welcome to the Bob Knakal Show. Couldn't be more excited today. Our special guest is a client and, more importantly, a really great friend, Andy Davidoff, the chairman and CEO of Emmes Group of Companies. Andy, welcome to the Bob Knakal Show.
It's great to be here, Bobby. It's
great
good
to see you. I have to tell you, I'm so excited about this. We have known each other for about 35 years.
Yeah, about that.
And I should know the exact number, but I think we've done 25 or 26 deals together over the years, several $100 million worth of transactions, and really excited, looking forward to this.
Yeah,
so thank you for being here today.
It's a pleasure.
So you grew up Stamford, Connecticut?
I did.
Tell us what it was like growing up in Stamford.
I was, Stanford is about an hour out of New York City, so I was a train kid. I'd come in and out of the city on the train, and I always was fascinated with New York. And my father, as you know, was in the real estate business as a broker up there, and so I kind of learned about this from a young age.
So you're probably having dinner, you probably heard deal stories.
Of course, over the
on
kitchen
phone.
table. New York always fascinated me. It was always, this place that wasn't replicable anywhere else that I had ever been. And I always wanted to be here. I always wanted to work here. It took me a long time, but by the time I was 25, I was here, and I was working in New York, and I worked in Jersey City, as you know, and I started my company when I was 30. That was in 1992, and it's been a great ride ever since.
Yeah, well, let's talk before we get to the starting of the company and everything. I love your story so much, Andy, because I've often said to people, look, especially kids who are in college, I'm like, look, accounting might be great to study if you're going to be an accountant, and finance might be great to study if you're going to go into finance. But real estate is about people skills. It's about things that you're not going to learn in college. And so school was a different kind of path for you, right?
Yeah, I dropped out of college. I came home from my first semester. I was in Boston, and my father had my grade report in his hand, and he said, I don't really think I want to keep paying for this, because I went to college when I was 17. I was a little young. It's like letting the dogs out of the house. I was, having way too much fun, not doing my work, not going to class. And he said to me, look, it's no big deal. Why don't you go, let's get a job for you. Let's figure out something for you to do. Go earn some money. If you want to go back to community college, you can do that. I never went back to community college. And that was it. And for me, I had jobs from when I was 11 years old. I always wanted to make money for myself. I wanted to buy my own cars, have my own stuff. I didn't want to ask my old man for money. I didn't want to do that. So I was always aggressive and always looking for the next big thing to do. And because of what my family was involved with at the time, I started out in, this construction side of the business. My first summer job that was a real summer job was 15 years old. They had bought an old apartment building in my hometown and they needed a demo crew. So they gave me a sledgehammer and said, go break up all of these cast iron bathtubs and haul them out of the building. And that was my job for the summer. So
Wow. Was that the first job? That wasn't after you decided college wasn't the place for you. What was your first job
I
was
had
working with your dad?
yeah, I had already had a salesperson license. In those days, you didn't need to be 18 to have a salesperson's license. You needed, in the state of Connecticut, an 8th grade education, and you needed a sponsoring broker, and you needed to pass the test.
Well, they really set the bar high in
Yeah.
Connecticut.
And I figured I could do that. And I was, I think, 16 and a half or 17 years old when I got my license. I think they figured out later, and somebody called my dad from the commissioner's office and said, hey, he's too young. And my father said, I'll be responsible for him. Don't worry. And it was off from there.
And what was the first function that you did working in that job?
Canvassing. So anybody that's in the real estate business knows the absolute litmus test for whether you can be a good real estate salesperson is canvassing. And in my town, they had an industrial district at the south end back in those days. And it was, auto body repair shops and, manufacturing facilities and junkyards and all of this. And I remember I walked out of the office, this was in the summer, my senior year from high school. I had a stack of legal pads and a box of pencils. And I'd go down there in my suit and tie and knock on doors. And I can't tell you how many times I had dogs sicked on me, people slamming the door on me, but you keep going back and you do it. And I filled out pretty much 2 or 3 legal pads with information on people who was selling, who was interested in selling, who wanted to buy, who was looking for more space, who wanted to move out of town, whatever.
So it was just general market feedback, general canvassing,
all canvassing,
leasing requirements,
anything,
sale requirements.
Didn't matter. What do you want to do, right? So I come back to the office at the end of the summer before I go back to school. My dad takes the legal pad. He starts peeling off, one lead after another, and he's handing them out to the guys in the office. And, that's what happened. So, but it's a very tough job. The canvassing job, as you know, right? It's just not for everybody. And for me, it's not really for me. I'm not a good canvasser, right? And as you know, I worked in the brokerage business for quite a while before I started my company. I was never skilled at figuring out how to get people to finish something, right? When you're intermediary, it's really hard. It's much easier as a principal when you're going principal to get somebody to get something done. So I give you guys, and you especially, because I love you, so much credit for being able to manage the transaction process and keep the parties sort of, at parity until the deal gets finished. It's really an art form, and you are the Michelangelo of that art form.
Thank you. Thank you for that. I always say prospecting is kind of the gasoline that puts the car in the engine in the brokerage business. And, we had a guest on recently, strip mall guy, Don Tepman, and he said he started in brokerage and hated cold calling. Sounds like you weren't a fan of cold calling either, but it's if you're going to be a broker, that's something you just have to do and you have to get comfortable with it. So you're working for your dad and time goes on and you start to develop some relationships that lead to opportunities.
I did. And my father had an interest in a joint venture partnership. This was at the very end of the 1970s. He had a contractor partner and he were developing buildings on spec in suburban New Jersey, office buildings. And at that point, you had what I'll call the Reagan economy was starting to come into play, where you had all of this movement from manufacturing to office work. And there was no place for these people to sit. And in the cities, obviously, you had a lot of migration out of the cities from big business, particularly New York. And so the demand was really there. And a lot of companies grew up in that age of building suburban office campuses.
And you could get financing for a building on spec.
At 15% maybe, and at 18%. I mean, it's interesting. The younger generation of people who came into this business in, let's call it the late 80s, early 90s, they might not understand how impactful and how expensive borrowed money was back then. I mean,
1980, the prime rate was 18%.
it was, yeah, and you didn't invest equity unless you thought you were going to see a clear 25 on your equity. You weren't going to do it, right? It was a very different environment from an interest rate point of view. But anyway, we were developing these buildings. My father and his partner decided, after they had 3 buildings already under construction, they needed somebody to go down and supervise this stuff. So they looked around and said, who's the cheapest guy we can find? Right? Let's pick Andy. Let's send him down there. So that's what happened. I wound up in New Jersey, suburban New Jersey, at the young age of 22 years old. And I had insatiable curiosity. And I'm lucky that I had it, because I didn't know anything. I didn't know anything about really construction, financing, zoning, going to town meetings. I didn't know that much about, office leasing. Eddie Gordon wrote a great book. I don't know if you've ever seen it. It's called How to Lease Space in an Office Building. I still have a copy of it by Edward S. Gordon. And I memorized that book. And it was very important to me, because we had to lease, frankly, a couple 100,000 square feet of empty buildings. Everybody was sweating bullets. But I took to it like a duck takes to water. So I really enjoyed it, and I learned a lot doing that. My father retired in 1983, and I, left the partnership that he was involved with in 1984. And up until that point, I hadn't been close enough to New York. I hadn't been close enough to, as I call it, the city. And I was very fortunate. I got a job on the development team for a project called the Harborside Financial Center in Jersey City, which was right on the shoreline of the Hudson River, directly across from, Battery Park City, the World Trade Center site. I was 23, 24 years old. I loved the job. I had a bunch of people working for me. I did leasing, management, operations, construction, all kinds of stuff. Wasn't making any money, because I was, again, the cheap hire, but I was learning like I was drinking from a fire hose. And it was formative in my career to be there. And then 2 years after I joined, that building and that project, which was about 6 million feet in total, was acquired by a pension fund, which was being managed by a company called Jones Lang Wooten USA, I believe, or Jones Lang Wooten Capital. It's now called Clarion Partners, or Jones Lang Wooten Realty Advisors, excuse me. And I wound up staying. They said, would you stay? And I said, sure, I'll stay. They let everybody else go. Right? And I asked once, I said, why did you let everybody else go and you kept me? They said, oh, you're the cheapest guy in the payroll. It's a no-brainer for us. So that was good. I stayed there for 2 more years, from 1986 to 1988. And finally, I was getting a little bored. We had finished taking the project through master planning. We had the original building of about 2.5 million feet, was essentially on its way to getting fully leased up. Any large organization, as you know, is much more bureaucracy than you have in a small, nimble organization. And I was getting bored and I wasn't learning anything. So I took the risk and I went to go see one of the main partners for Jones Lang in New York. And I said, I'm not feeling like I'm going anywhere. I'm not learning anymore. And, no harm, no foul. I'm not going to be around in 6 months. Just want to give you the heads up. Because when you're young, you can afford to say those things, right? And so my message to young people is, don't be afraid to come to work willing to be fired, because that's what it takes to be successful. You have to take that initiative, and you have to, at some level, think, yes, you got to look out for number one, but if you're part of a team, you got to look out for the rest of the team too. And so for me, that was a very impactful moment, because he turned around and said to me, great, think about whatever you want to do, come back to me in a week and tell me, and we'll figure out if we can make it work. So I said, I want to come to New York. I know everybody in like the tri-state area. I want to go call on people and see who wants to buy, who wants to sell, who wants to lease, and let me see if I can generate some business. And he said, fine, do it. So now I'm back to the legal pad and the box of pencils, right? And it worked out fine. I stayed at Jones Lang for 6 years. I worked in the investment business, the mortgage finance area. My last assignment with them was in their downtown leasing group and, down on Wall Street. I had really good experiences through that company. I had exposure to international markets. It was very important and valuable for me in my growth professionally. And finally, in 1992, we had all of these savings and loan businesses that failed from about 1989, 90, 91. Everybody blames it on junk bonds. You can blame it on whatever you want, but the government formed something called the Resolution Trust Corporation as receiver for these failed savings and loan institutions. And they did something which I don't think is going to ever get replicated. And you were in business at that point. The market was essentially frozen shut. There was no transaction volume. Nothing was trading across the country. And you had about 300 of these savings institutions that had mortgages and mortgages and mortgages, and no government agency to really supervise the resolution of those mortgages.
Yeah, well, also what was happening in New York is the banks were going through what was then a 2 or 3 year foreclosure process.
Right.
So it really started in 89. The faucet was turned off. And these banks are going through this protracted process of trying to get title to the property. Took a long time. And I'm sitting here thinking, 1992, you start the company. You must have some pretty big cojones to do that at that time.
It's not about that. Well, let me tell you the story how this happened. So the RTC started a process where it was a sealed bid. You had to have proof of funds. You sent in the sealed bid to an office somewhere, right, over a fax machine, and high bidder takes the deal. There was none of this backroom politics, this kind of, you know what I mean? It's high bid wins. It was very, very fair, very transparent.
And it had to be that way because they had hundreds and hundreds and hundreds of properties they had to sell very quickly.
I don't think you see that anymore. I mean, you see some of these recent deals where the government, whether it's the FDIC or some other agency, retains an interest and they're a participant in the resolution, and that's their way of trying to get the highest face value on the sale price. But the market was gridlocked, and it did impact a lot of people because you talk to people that had portfolios, whether they were insurance companies or pension funds or pension fund advisors, they were ripping their hair out because here's the RTC selling assets at 50 cents on the dollar. And they have to mark their assets to market based on what the prices are. But in hindsight, in that 3 or 4 year period before the RTC was shut down because they liquidated everything, the market was back to normal. Things were flying here by 96 or 97. Rockefeller Center had gone through bankruptcy in New York, but stuff was, had turned around. You didn't have a situation where it was a lost decade, let's call it, of kind of one tweak to another tweak to another tweak to restart the real estate capital markets. It happened fast.
It was like a cleansing of the market.
Absolutely.
The foreclosure process did take a long time, but then it was price discovery, get it out, reformulate, banks closed down, new banks were formed, and it just was a very expeditious way to get all the turmoil and the distress through the cycle.
And there's a psychological aspect to it. If you're a bank, and you have a borrower, and he owes you $100, you're not going to let him off the hook for $80. You're not going to do it. You'd rather, from a face value perspective, you'd rather sell a loan to somebody for 65 cents and let him take the 80, right? That was the view from the RTC. They're like, we don't want to deal with all these guys. We don't want to litigate if it comes to that. We don't want to, have to take the asset over, go through receivership, foreclosure, or bankruptcy. Let's just sell it for cash, no financing to the highest bidder, and, you go resolve it yourself. I think it's a much more political process now for the government to try and do that. I don't think we're ever going to see another, what I call, opportunity like that in the real estate business. And obviously, after we bought the first deal and then the second deal, everybody piled in.
Well, let's go back to 1992, because still I'm thinking. I remember those times. We were, Ed Winslow was the first salesperson we ever hired. We were sitting in the office, and we're basically making our calls, getting our 8 connections done by 11 o'clock in the morning, and then playing solitaire with a real deck of cards. We didn't have computers on the desk in those days, but there was nothing to do. And you decide to start a company. What was going through your mind? Take advantage of this opportunity?
It's another story. my first child was born 4 months before I started Emmes. And I want to give credit where credit is due. Emmes got started because I had an original partner named Michael Sonnenfeld, brilliant guy. He's still around. I'm sure he does a lot of other stuff. We split up in 98, but for the first 6 years, it was literally intense. It was 24/7, 365. We invested a boatload of capital. We bought a bunch of deals. And, so testament to him, he had the foresight and vision, to be bold.
And Andy, how did you meet Michael?
Michael was my original boss at Harborside. So he was successful from that development and that sale, and then, worked on trying to get me back to help him with this RTC business. And I said, I never want to work for you again. He was a difficult guy to work for, but he was a good partner. And I've been blessed in my entire career to have really good relationships and good partners.
So you start the business in 92. 94, one of the, I think, all-time great opportunities in the history of New York real estate comes along. And for those that may not know, one of the biggest investors in New York real estate was Saul Goldman. Saul Goldman had a partner, Alex DiLorenzo. They bought about 500 buildings over the years. And I remember early on in the mid-'80s, Paul and I went over to meet with Saul Goldman. And I'll never forget, he was hooked up to a dialysis machine, sitting at his desk, making calls, and he's meeting with us. And I said to Mr. Goldman, how did you come to own so many buildings? He said, Bob, I paid more than anybody.
Right, that's absolutely true.
So he owns all these buildings, and he and DiLorenzo have a falling out. And the way they divided up this portfolio of 500 buildings, they put 2 buildings of similar value on the table, flipped a coin, and the other guy picked, and they divided up 500 properties this way. And the Goldman family has turned their properties into a multi-billion-dollar business, and the DiLorenzo side had a little different fate. And so why don't you talk a little bit about that transaction, because it really is one of the great transactions in the history of New York.
It is, but it's a lesson to be learned. I think that there was a lot of dislocation. There was 3 family members that were the children of the original partner of Saul Goldman, and 2 of them were really not involved in the business. One of the siblings was, and they had taken out a loan, a spreader mortgage on 106 properties.
This is Alex Jr.
The third.
Alex the third, right.
Not a bad guy. I want to, say this. I had met him a couple of times. He was completely a gentleman and polite and all of this. And obviously, I never had the pleasure, by the way, of ever meeting Saul Goldman, which is one of my great regrets in life, because he was legendary, and we have so many legendary characters in New York real estate. But we bought the mortgage in a sealed bid auction from the RTC.
This was 90 properties.
106 properties.
106 properties.
Yeah, all over, all 4 boroughs. We didn't have anything in Staten Island in that deal, but we had Brooklyn, Queens, Bronx, Manhattan, and an interest in an asset in Jersey City. We paid essentially par for the loan. There was some default interest and accrued expenses and all of this, but we really paid par for the loan, and people thought we were out of our minds, because these properties, a lot of them were in horrible states of repair. There were tenants in there that weren't even on the rent roll.
Yeah, but just to talk about this portfolio, though, what you guys have to understand, this is 109 properties?
106.
106 properties. But Goldman-DeLorenzo had this philosophy: let's buy the key piece on this block, and let's buy the
Saul. I mean, to put credit where credit is due, Saul was the genius at picking out assets. He had a couple of brothers that helped him in the business as well. His brother Irving, who was Lloyd Goldman's dad, another genius who was really the operating guy. And I don't know what Alex's role was in that partnership, but they had this assemblage of assets that will never be replicated.
Yeah,
in my opinion.
Underlying fee positions, subject to long-term leases, key pieces that were on the corner or in the middle of the block. Very strategic portfolio. So to get all of those properties at one time that it took decades and decades and decades to put together in one shot, and that was exciting.
It wasn't. We didn't own it in 2 weeks. We had a lot of negotiation. There was some litigation involved. There was, there's a lot of horse trading. We had we gave the borrower back a few buildings and some cash, and you have to make a deal. But we did get control of the properties in 1995, and we we went to town. I mean, a big part of what my experience has been in the real estate business is fixing assets that are challenged. They're either, undermanaged, over-leveraged, they've been capital starved, they've been, leased poorly. They're not at the right level of what I call purpose, utility, and value for what they are in that market and for what they should be. So, and we've been fortunate as well that in New York, there's been a tremendous amount of development. There's been a tremendous amount of gentrification, and there's been a tremendous amount of population increase. So if you look at the population of New York City, 1994 to 2014 as an example, I mean, you have over 1 million people here that you didn't have before. So that's been beneficial, and we've benefited from that. So I know you love for me to quote numbers, but the simple way to think about it is we've returned to date on that deal about 16 times the equity that we originally invested. We still hold a number of the properties that we have them rented. And, it's been a great deal for everybody. It's not the greatest deal we've ever done, but it's been a great deal for everybody. And we've actually had situations where we've had some partners exit and the other partners have bought them out. And so we've had liquidity from time to time, and it's been a very rewarding deal. So, and one that I think was, again, like drinking from a fire hose and learning how to manage things and manage through receivers and, foreclosures and stuff like that. It was very formative for me in terms of my education in this
So, Andy,
business.
when you started out, you were New York based. Today, you own assets in California on the West Coast. You own in Japan. Talk a little bit about how did when you were growing the business, how did you start to go outside New York, or what were the things you were looking for? Because one of the things I really admire, you unlike a lot of investors who stay in one silo and just buy one type of thing, you buy anything that's a good deal.
Well, there's that kid, Mikey from the Life cereal, right? They say, give it to Mikey, he'll eat anything. And there is a subset, and this as an intermediary, there's this bottom, after you go through all the prime buyers, and then you go through the intermediate buyers, and then you get to the very bottom, because nobody wants to buy this asset. Who are you going to call? So our reputation has always been, we've never been the first call. Never. We're usually not the second, third, or fourth call. We're typically, I know when I get that phone call from somebody that they're coming up dry on everything, right? Now, the fact is, over the last 30 years, the real estate market has gotten more liquid. Notwithstanding, Lehman Brothers and the financial crisis and COVID, there's more general liquidity in real estate, investment grade real estate in the United States today than there was when I started. And similar to New York in the 70s when there was no liquidity and guys were buying office buildings for $30 a square foot. I mean, so this is the way that, we're sort of been groomed as a business, is that we're going to look at something and get interested in it if it's big, it's messy, it's complicated, and no one else wants it. Those are the first three things on the checklist. What's interesting, because a big part of what we know we have to do is we'll never be a stabilized real estate buyer. We'll never be, a pension fund or an insurance company or a passive investor who says, look, I just want an income stream and I want to buy something that's fully leased for 20 years to Microsoft. That's never going to be us, because we know the rate of return is going to be fixed. And, hopefully at the end of the day, you'll get some capital growth out of it. That's not us. We want to buy something that's 50% empty. As long as we think we have the ability to turn it around and make it work with a judicious application of capital. And that's where the disconnect happens, because the seller's here, your value is here, and you have to put a lot of money into it just to get it to this value. So we've seen a lot of deals go away because we're never going to hit that price. The RTC stuff was seal bid, show up, post, show us you got the money, and then, that was easy for us, so that there's not as much transparency in the process today. We have a good relationship. So we've done stuff where you've been working with us, either on the sell side or the buy side, and you're an honest guy. You're going to call me and say, you're not going to get this kind of money for this building, right? We've had these dialogues. Or you want to buy this? Honestly, I get it. This is what you think it's worth. We've been down the road. We've had 3 broken contracts. Can you edge up your bid? I'll present it for you, right? We've been in that situation, right? So at some point in time, the seller has to get to the point where they understand they got to clear the market. There has to be price discovery. So the kind of assets that we like are the ones where it's difficult to get to price discovery. And if it's difficult to get to price discovery, the more difficult it is, the more interested I am, right? But there's an awful lot of smart people out there.
So, Andy, let's talk about it. What was the first move you made in California?
I had been going back and forth to California since 1994, looking at bank portfolios. I had driven from Chula Vista, which is basically the Mexican border, to Seattle, the whole west coast of the United States, looking at a big bank portfolio. We didn't buy that one. So I knew California because I kind of knew where it was. This is like that drawing from the New Yorker of, New Jersey and California, right? So I finally, met a girl and, moved out to California, at least part-time from New York. And there was an empty building, brand new, under construction, right on the interchange of the I-405 and a major street in Orange County. It's a 500,000 square foot building. It's a $240 million construction loan on it. Everybody in the mortgage business in the United States was out of a job at that point. This was at the very beginning of 2009. Seller, the lenders, no one wanted the building. Everybody wanted out. So we made a deal to buy that building, which at the time was a very high number. It was just around $300 a foot. We got the group of lenders that had put the construction loan on the building to refinance us for 5 years for $120 million. So they took a big haircut, but they didn't really have any choice. It was a group of 7 lenders. We leased the building up fully to about 94% in 2.5 years. And we sold it. And I think the net profit on the deal was $120 million on a single building. We sold it to a big insurance company who still owns it. And, that to us was, a very successful deal because we knew we could get at least if we could buy it at the right price, because it was the best asset in the marketplace. Nobody wanted to buy it. Office was radioactive, which, by the way, it is currently radioactive, or certainly the half-life of radioactivity. All right, it's happened in the office business, and that'll end at some point in time. And for us, that was a home run. That's the kind of stuff we'd love to do. Now, will I ever be able to buy assets of that quality, absent some huge market dislocation like we saw in 2008? Not likely. Right? More likely it'll be like this old rundown stuff that we wound up buying in New York or in other markets. You talked about Japan. We are not in Japan anymore. We're out of Japan. But Japan had very similar dynamics to what was going on in the United States over the most recent past, particularly with office. There was just huge amounts of over leverage. Buildings were bought at numbers that would never make sense, at very, very low interest rates, and you had a lot of zombie assets out there. So we started buying those assets either in what their equivalent of foreclosure or bankruptcy, or we'd buy the assets from the banks who had taken them back, or they'd arrange a marriage between the borrower and us. It was a good business. We invested about $100 million of equity there. We bought 8 buildings, and we started that in 98. And by 2004, the J-REIT, the Japanese Real Estate Investment Trust market, was at that point evolving. And we wound up selling all these assets to a J-REIT. And it worked out very well for us. And frankly, I'm not a currency trader. So we went in unhedged. And the yen had strengthened at the same time. So we made money on the real estate, but we also made money on the currency. And I love Japan. I would go back there in a heartbeat if I thought there was a real big opportunity there.
Well, Andy, today there are buildings in this neighborhood. We're in the heart of the Garment Center here, intentionally so, because there's so much that is happening and going to be happening. Hopefully, Midtown South rezoning passes, and half the buildings in this neighborhood will be knocked down. But we're seeing office buildings, B and C office buildings, trading for under $200 a foot. That was the price in the 90s. Do you any appetite? What are your thoughts?
I have a lot of appetite.
Where are the opportunities in New York today?
Look, New York, let's take Manhattan specifically. So it's hard to say, New York, because you're talking about sort of the outer boroughs, and, one area of Queens is different than that area of Queens. But if you're talking about Manhattan generally, if you think about the demand for housing, it's almost insatiable. I watched, like you do, YouTube and all of these social media things where people are talking about house prices in Florida are falling and Texas is going over a cliff and this and that. We put a listing for one of our apartments on Street Easy. We get 50 responses in an hour. There's no market in the country that I've seen where the demand is so incredibly strong. And admittedly, it's for affordable stuff. We're not advertising apartments for $25,000 a month. But there's such a huge demand. And I think it's incumbent on the city administration to do whatever they can to promote the conversion of these buildings to residential. I don't see what the barriers are that prevent those kind of laws being passed, those kind of changes to zoning being passed. I can understand that if you have a 30-story building, you don't want it to be a 90-story building. I can understand. But these mid-block, underutilized office buildings, most of which were built in a period from, let's call it 1920 to 1940, right? They have plenty of light and air. They have operable windows. They have reasonable floor heights, but they're not, they don't have the purpose, utility, and value that they should in an apartment building. So we've seen a lot of the 1960s and 70s office buildings being bought by people and converted to apartments, and that seems to be a very good business. And I think that business has legs to it and will continue. I don't understand why it hasn't happened more on this quality of stock.
Two reasons. One, City of Yes rezoning passed this past December 5th, so it only just went into effect. And the 467M tax abatement program is very, very robust. It's going to precipitate a lot of these conversions happening. Think about it. You pay no real estate taxes during your construction period. That's up to 30 months. And then you get a 90% reduction in real estate taxes for 35 years. That's very compelling. That's going to force a lot of these buildings to be converted. So we think that the B and C office will disaggregate into three buckets. Some buildings will stay office, be renovated, because every tenant can't pay $200 a foot in a new building. Some will be converted to residential, and based on how these values are getting so low, even when you layer on demolition costs, they're going to be demolished because the price to buy the building plus demo is less than land value. So it's really, I think there's great opportunity.
If I had to pick one of the three that I would have an interest in, it would be that middle section. It's if you have a building that works, that I could figure out how to make work, but it's important to remember, I have to invest 100 cents on the dollar. I don't get to buy construction at a discount, right? I have to pay retail for it. And you have all the inherent problems with doing construction in Manhattan, obviously. So the price of the asset has to be low enough to justify the capital investment, one, and number two, the length of time it'll take to get the building up and running. And that's usually a couple of years. But the demand for residential is insatiable. I could tell you, if I had 4,000 brand new, ready to go apartments in New York, they'd all be rented if they were at any reasonable number.
1.4% vacancy rate. It's amazing. And that, you tell every politician, look, supply is the solution to our housing crisis.
Absolutely.
Create incentive to build more housing, and yet it kind of goes in one ear and out the other. But we'll see. 485X has been a big clunker. Hopefully they'll tweak it a little bit. I was at a lunch with Andrew Cuomo today, and he was saying a lot of what sounded like very, very positive things if he becomes mayor that he would do to change 485X, do some other stuff to encourage more creation. But we'll see what happens. Before we go, I have to say, Andy, one of the things I always admired about you, and talk about your passion for motorcycles and these trips that you go on basically across the country on a motorcycle. Tell us about that.
I've been riding motorcycles my whole life, and I've gotten much more into long distance motorcycling. So I have a place out west, and it's much better to ride out west than it is here on the East Coast. And so I've done most of the western states, Arizona, Utah, Colorado, Wyoming, Idaho. I've kind of done all that. And I do both on-road and off-road. So I like being on the dirt, but you're out in the great wide open, which is refreshing when you come here and you're in the canyons of Manhattan, and then you go out to the canyons of Utah. It's a very different feeling.
Different canyon.
So, yeah. So for me, it's a great disengagement from all of the stress of city life and all that. And I enjoy it, and I'm going to keep doing it as long as I can. So
Awesome. And to finish up, you and I have shared some of the best meals
we
that
have.
I have ever had in my life. Give me best East Coast restaurant, best West Coast
Oh
restaurant.
man, that's so hard. So I'm his wingman for fine dining. You know, we're both wine aficionados. I can't name a favorite restaurant.
Well, you
'Cause
have
then
so many friends that own restaurants. You may
do.
upset some
I
people.
do. I don't want to
you
get
gonna
in
pivot?
trouble,
Okay.
but I have quite a number of them, and it is a great joy of mine to go out to dinner with you. We always have a great time. We've been doing it for many, many years, and as everyone can tell. And you know, from my perspective, it's one of the great joys in life is to share a nice bottle of wine and a nice meal with good friends. It's there's nothing better than that for me. So I'm happy, and I'm looking forward to our next night out somewhere.
Absolutely. Andy, the success that you've had in the business is unbelievable. Continued success. I hope that we do 25 more deals together.
From your lips, man.
But thank you so much for being here today. It's great to hear your story. And let's go have a great bite to eat.
For sure.
All right.
That's great. Appreciate it, Bob.
Good.
Thank you.
Thanks. Hope you enjoyed the show, guys. If you don't want to miss the next episode, please subscribe. And don't forget, there's an opportunity to be in the live studio audience. So follow us on social media, and we'll make announcements about when the next filming is going to take place. We hope you enjoyed the Bob Knakal Show, which again was presented by our friends at BKREA, the most powerful platform on which to prospect, evaluate, connect, and close any real estate transaction.